Well, welcome and good morning. And I'm so glad that you could join us virtually this morning on our Zoom and the St. Louis Regional Chamber's briefing. Today's briefing is on the economy and the financial services industry. And COVID-19 has impacted every single economic sector and has put significant stress on our regional and national economies. As COVID-19 continues to impact our region's economy and community, the St. Louis Regional Chamber remains committed to serving as a convener and an advocate for our members, our investors, and our community. I'm Tom Chulik, President and CEO of the St. Louis Regional Chamber. And first of all, I'd like to thank all of our frontline healthcare providers and those that support them and their families. They're doing a terrific job. And today I'm very excited to have three speakers who will give their thoughts on the current state of the economy, our growing unemployment figures, and what their respective bodies are doing to help our national and local economies. Today, to begin our briefing, and he's in terrifically high demand, the St. Louis Federal Reserve President and member of the St. Louis Regional Board of Directors, Jim Bullard, will discuss the measures the Fed is implementing to abate this economic crisis. Then following President Bullard's remarks, Congressman Wagner and Congressman Blaine Luetkemeyer will discuss their role on the House Financial Services Committee and what to expect from Congress in the future. And I'd like to thank all of them for taking time to join us on our virtual meeting this morning and for their continued support of the St. Louis region. And now I'll pass the baton over to Austin Walker, Vice President of Public Policy and the Regional Chamber. Austin, go ahead.
Thanks, Tom, and good morning to everyone. Thanks for participating on the call. I should first note, if you have a question you'd like answered by any of our speakers, please use the chat feature in Zoom and we'll do our best to get to your questions. I'd also like to make a note at the top of the meeting that two of our guests, Congresswoman Wagner and Congressman Blaine Luetkemeyer, are currently in a meeting with Treasury Secretary Stephen Mnuchin. They're expected to join us at the top of the hour on this call. However, this is a high-level meeting about an important topic, so fair warning to our listeners that there might be a little bit of a gap around the 11 a.m. hour if the meeting with the secretary runs a bit late. But now on to our first guest. We're delighted to have Jim Bullard, the president and CEO of the Federal Reserve Bank of St. Louis. In that role, he is a participant on the Federal Reserve's Federal Open Market Committee, which meets regularly to set the direction of U.S. monetary policy. He also oversees the Federal Reserve's 8th District, including activities at the St. Louis headquarters and its branches in Little Rock, Arkansas, Louisville, Kentucky, and Memphis, Tennessee. A noted economist and policymaker, Bullard makes federal transparency and dialogue a priority on the international national stage, as well as on Main Street. He serves on the board of directors of the St. Louis Regional Chamber and the board of directors of Concordance Academy of Leadership, and he is a past board chair of the United Way USA. Mr. Bullard is a co-editor of the Journal of Economic Dynamics and Control and a member of the Central Bank Research Association Senior Council. He is an honorary professor of economics at Washington University in St. Louis, where he also sits on the advisory council of the economics department and the advisory board of the Center for Dynamic Economics. A native of Forest Lake, Minnesota, Mr. Bullard received his doctorate in economics from Indiana University in Bloomington. Please welcome President Bullard. The floor is yours, sir.
Great, thanks for having me. It's a pleasure to be here today, and I'm looking forward to questions from the audience here. Let me just start by giving my take on what has happened over the last month, really. The FOMC met on March 15th. We aren't even a month out from that meeting. That's the one where we lowered the policy rate to zero. We had a Sunday meeting and we really started in earnest to react to this crisis. So it's been very fast moving. Some people are comparing this to 2007 to 2009, but this is much, much faster. We did all these things within 30 days. In the 2007 to 2009 episode, we did that over a long period of time, more like 18 months. So it really has been fast moving. I don't need to tell you that this is a major disruption, not just in the US economy or the regional economy, but in the global economy. You have many nations around the world really struggling with this pandemic, and the US and Europe in particular. really getting hit hard here. I think one thing to keep in mind is that the US, if you compare to Europe, I think Europe's actually being hit harder. Deaths per million in a lot of these countries are quite high. Italy, Spain, France, UK. If you add Germany to those 4 countries, you get a population size that's very similar to the US. So if you want to compare what's going on in Europe to the US, you might add those 4 together. They've had an uneven response just like we have. So you might expect different results in different countries, but they are turning the corner in Europe. I think that has markets gaining some confidence that we'll be able to put this behind us. I think the US numbers will start to come down here shortly. I guess I haven't just the recent couple of days here, but we'll keep track of that. And I think the virus has a hard time with a quarantine like this. It has a hard time spreading. So I do think we'll get down to a low number of cases and a low number of fatalities in the weeks ahead. And then the question will be what to do then. Let me talk for just a minute about Fed policy and how we've reacted to this. I think the spirit of the times is to maintain market functioning through this crisis. It's a huge shock. We've got things happening that are way out of the ordinary for U.S. macroeconomic performance over the whole time, 100 years or more that we've kept track of these things. So one of the things that's most important is that you don't get the freeze up in financial markets that you might otherwise get. And right at the beginning of the crisis, we had liquidity problems even in the US Treasury market, which is by far the most liquid market in the world. And one of the initial responses was to intervene there and try to maintain liquidity for traders in that market. Also mortgage-backed securities. But since then, we've added many other programs in many other segments of financial markets, but almost all of those are oriented toward trying to get market functioning so that people can feel confident that they'll be able to make a trade if they need to make a trade, and there will be a market price and you will get price discovery. So I think that has been successful, at least for the initial wave of this crisis. Our liquidity measures in many markets were going the wrong way for several weeks, but now have been reined back in. So I think that at least initially, that part has worked quite well. And we're certainly willing to do more if there are other areas of markets where we need to maintain market functioning. On the fiscal side, and I'll let my colleagues from Congress say more about this, but I would say that the fiscal response has also been extraordinary and very large, and it's valued at about 2.3 trillion. The reason I think that's a good number, and I like to emphasize this to different groups, is that I consider the second quarter to be the main disruption quarter for this pandemic. In fact, I would call that the pandemic adjustment period, and throw out all your old models and throw out all your analysis, because these numbers are going to be way different from anything you've ever seen before regarding the US economy. It's like you're driving your car down the freeway at 70 miles an hour and you come to the construction zone, and now you have to slow way down because you're in the construction zone. There's not really anything wrong with the car, but you just can't go as fast as you would normally go. And that's very much what is happening with the economy. We cannot produce the same number of goods and services that we normally would, which would be on the order of $5 trillion per quarter in the US. I'd say we're only producing at about 50% of that pace. If that continues for the whole quarter, that would be $2.5 trillion of lost output and hence lost household income in the US. So that's a big number. It's way out of the ordinary, but we're trying to invest in our public health, and we're doing this for a good reason. I think Congress did react to this appropriately and think about how they could get resources to those that are most disrupted. So we have a lot of take up in the unemployment insurance program. We estimated that there might be on the order of 50 million people at risk. They're customer-facing type jobs that are no longer being used in the current environment. So it's not fair to them. They didn't cause the problem. You want to be able to ensure them that they can pay their bills and maintain at least some of their lifestyle during the second quarter here while we're adjusting to the pandemic. So on the business side, we've got the small business loans, which are really grants in the end, and that has also been quite successful. The Congress is now thinking about topping that program off, and I think that would probably be a good idea. When we were first looking at that, it wasn't clear that that would actually work, but obviously it's become very popular. So hopefully we'll get more resources on that particular program going forward. It's really meant to handle small businesses, less than 500 employees, and try to get them through this process so that we can open up on the other side. On the, I think the challenge on the Fed programs and on the fiscal programs is really implementation. The Fed is working jointly with the US Treasury to get a lot of these programs up and running, the ones that aren't already up and running, and we're helping in every way that we can to get them implemented. Something as simple as trying to hand out cash to lots of households, which sounds like an easy thing to do, is actually quite complicated logistically speaking. And you know, we've here St. Louis Fed in particular has helped a lot on that particular program. But it's not as easy as you would think. You have to locate all these people. You have to somehow get a direct deposit. Then you have to get checks to people that don't have the direct deposit or didn't file taxes or something like that. So it's a big country. There are lots of different people, and the implementation risk is substantial. So I would expect it to not go perfectly. And you're certainly seeing all kinds of media stories about how it's not going perfectly. But when you're in the middle of a crisis, it's going to be certain, you know, there's going to be a certain amount of chaos. So let me talk a little bit at the end here about the quarantine policy. The quarantine policy is appropriate for now, but it's a crazy inefficient policy because you've got tens of millions of healthy people sitting at home in their houses. And why is that? It's because we're not sure where the virus is. So you'd really like to, while it's appropriate right now, you don't really want to go back to this quarantine policy if you don't have to in the future. I'd say a rough guess would be, based on that 2.5 trillion that I gave you before, it's costing us $25 billion a day to have this quarantine policy in place in lost household income. So you can only do that for a little while, and you can only bridge to the other side for a little while. After a while, you have to think about how you want to manage risk, and we manage all kinds of risks, health risks and other risks to the economy. And we're going to have to do that as well for COVID-19. The good news is that we do have the technology available right now. We don't have to wait for a miracle. We have it available right now, which is that we can test people. We can't test them at the scale we would like to, but widespread testing of everybody in the economy would put an end to this crisis and would you know, basically end this whole episode. We can't get there right now, but this is costing us $25 million a day. So things that didn't seem possible before become possible. When we entered World War II, you might say, well, we don't have enough tanks. Well, you got to build the tanks. You got to build the ships. And here you want to build something that's really pretty simple and pretty inexpensive compared to the size of the economy, which is these testing kits. And you want many, many, many of those. And so I think that's the surest route to bring a complete end to this crisis. Now, a lot of people are saying, well, I don't know what they're saying, but they're saying it's too hard to do that or something. But at these kind of numbers, you really want to ramp that up at all costs. And even if somebody gets rich off it or something, I mean, you still want to do it. It's really, really valuable at this point. And it's not just that, oh, the hospitals need some tests. It's all businesses need these tests. Households need these tests. Churches need these tests. Schools need these tests. Everyone needs them because they need to know where the virus is, and they need to be able to manage this process going forward. So just as an example of the kind of things that we do elsewhere to manage risk, we have a lot of traffic accidents every year. If you are very concerned about traffic accidents, you might say we're going to quarantine driving. We're not going to allow anybody to drive anywhere because we don't like these deaths that are occurring. That isn't how we manage that situation. Instead, we require people to get licenses. We have airbags and seatbelts. We have rules of the road. We have police that are trying to get reckless drivers off the road and so on. So we've come, as a society, we've come to a way to manage that risk against the benefits of having a good transportation system. I think the same thing could be said for this health situation. We've got ways to handle our health crisis, and we're going to have to really get innovative about how we're going to do that and how we're going to provide a safe work environment, knowing that this disease is out there and that we're not going to have a vaccine probably in the near term here. But I think that's all doable when you look at other types of risks that we manage for the economy. So I think I'm going to stop there and see if people have questions or if I've stimulated any thinking. So Tom, maybe I'll turn it back to you.
Austin, you want to go ahead with some questions, please?
Yeah, sure. Thank you, Mr. Bullard. It's an honor to have you on today's call and join our members. So thanks for being with us this morning. Last month, you made headlines for publishing research that the unemployment rate will soar above 30%. What led you to that conclusion, and do you still stand by your prediction?
We have that on our blog, and we've been posting a lot on our St. Louis Fed on the Economy blog. So you can, those that are interested might go check out. It's really daily posts about different types of analysis about the pandemic. That one is called a back of the envelope calculation on unemployment. What we did was identify the number of employees that are at risk. They're in customer-facing industries and or non-essential industries. And if the response, so they're on the order of 50 million people. And so if all those people get laid off and go claim unemployment insurance, then you could get to these very high unemployment rates. Most people think the unemployment rate, even today, is already in double-digit range somewhere. The blog said that it would be anywhere between 10% and 42%. So that gives you some idea of the kind of scale we're talking about here. Now, uptake on unemployment insurance is maybe not the worst thing in this environment, because what you're trying to do is keep people whole as they are trying to get through this pandemic adjustment period. So the business, many businesses have no revenue at all. They might say, well, I can't pay my workers, so the workers go over to the unemployment line, but let's call that pandemic relief instead. Congress upped their game on the amount that you would get in the for unemployment insurance and put it at a number that is going to be 100% for a lot of workers, but not all. And so they're going to get enough to be able to pay the rent and other types of bills that they would have to pay on a regular basis while they're trying to get through this process. Hopefully this does not continue very long. Ideally, the unemployment rate would spike at a high level, then come down again as we get the economy started up again on the other side of this crisis.
So the goal really is to keep people whole rather than to stimulate, and that's your argument there.
Yeah, let me talk about, and people are still using the word stimulus, so let me rant about that a little bit. I think the idea that you want to bring production into the second quarter doesn't make any sense in this situation. We're not trying to get people back to the baseball game or back on airplanes or meeting in huge groups. We don't want to do that in this environment while we're trying to invest in public health. So what we want to do is have people stay at home, try to keep them with enough income to get through this period, And then hopefully we'll be able to open up with good risk management going forward of this disease.
So another question, the Federal Reserve recently announced that it would purchase up to $600 billion in loans through the Main Street Lending Program. What is the Main Street Lending Program, and what else has the Federal Reserve been doing to help the economy?
Yeah, as I said in my remarks, we have this SBA facility, which is a Small Business Administration, and that's really geared toward, as it sounds, small business, less than 500 employees. And those are forgivable loans with some strings attached, but it's been a very popular program. Firms have to go to their bank. They have to get this, approved at the bank, and then the Fed will actually take those at the discount window as well. So that's another feature of that. But the Main Street Lending Facility is designed for the firms that are over 500 employees and still are too small to have direct access to capital markets. So I think the limit there is $2.5 billion in revenue, but don't hold me to that. I think that's the number they came up with. And if there is a firm that's on the borderline and they get something through the SBA program and they still want to come to the Main Street Lending Program, that's also allowed. So the idea is to help these kind of mid-sized firms get through this period. And it's not as generous, I would say, as the SBA program, because the SBA program has the forgivability feature. But on the other hand, they can get a loan, and then the bank can sell that loan to the special purpose vehicle outlined by the Fed. So we are taking some credit risk in this. Some of these firms may not make it, but Congress and the U.S. Treasury has put up some of the capital behind this as a cushion to absorb possible losses that may occur. I'm hopeful that that doesn't happen, that we can get the incidence of COVID-19 much lower, get the fatalities much lower, and then reopen the economy with appropriate risk-based policies as we go forward.
So we've got a question on the call. You've said that people are staying home to invest in the health of the country and that this shouldn't be compared with other economic recessions. Do you anticipate the economy and jobs to boom back in a V shape like some economists have predicted, or do you think that the recovery will be more of a U shape?
I think it's there's no reason why it can't come back in a V shape. I would actually, I know it's become popular to say that that's not going to happen. I think it can happen, but will it happen? I think that's kind of the question. It can happen if this is managed appropriately, if you make sure everyone is comfortable and able to pay their bills through the second quarter. If you can get the virus under control, and the virus can take twists and turns, so there's a lot of uncertainty around that. But I think as the incidence of the disease goes way down, then I think you should be able to reopen. Now, reopening means taking account of the COVID-19 risk, and ideally, you'd like to test everybody. If you can't test everybody, you're going to have to use relatively crude substitutes like taking everybody's temperature, getting people to attest to their health status, all kinds of things that would substitute for a test. But I think all that can be done, and I think businesses will be very innovative across the country. One thing I'd like to stress is a lot of this in media is portrayed as, what does the government say versus, I don't know, what the economy is going to do. But that's a little bit of a misunderstanding about what the economy is. It's a big, complicated set of lots and lots of firms and lots of households, and it's the individual incentives of those households and companies that will determine how business proceeds going forward. I don't think pronouncements by various governments are really the key thing that's going on here. What we have is there's been a shark in the water, and as long as the shark is in the water, people aren't going to go back to the beach. So you have to make sure that you're demonstrating to people that, hey, we caught the shark isn't there anymore. And that's what's going to get people to resume daily life and their normal activities. I don't think it's a pronouncement of anybody, really. You have to show people that they're not at risk if they come to work, that they're not at risk if they go to the restaurant, that they're not at risk if they do their everyday activities. And once we get to that point, then the economy will be back at full strength.
We've got a question from one of our members, Edward Jones. Your colleague at the Federal Reserve Bank of Minneapolis said this week that the U.S. could experience repeated economic shutdowns until a vaccine or therapies develop for the coronavirus, and that we should be focusing on an 18-month strategy for our healthcare system and our economy. What are your thoughts?
Yeah, I think the idea that you're going to go back to quarantine, it's a crazy inefficient policy. You've got all kinds of healthy people that are sitting at home. Why are you doing that? You're crushing these people. It's really the lower half of the income distribution, and you're at risk of pushing them into poverty for a long time. So you really don't want to go to the quarantine policy unless you have to. And I understand that we got surprised maybe by this pandemic, and maybe we weren't as ready as we should have been. But and therefore, I think the quarantine was maybe the right response initially, but we're not initially anymore. So it's not going to be the right response to come back with a global quarantine in the future. I think maybe locally you might do something, in certain cases, but what you're going to have to do is track the virus much more carefully, test much more carefully than we were able to at the initial part of this outbreak. And also, I think now that everybody knows about this and has heard about it and learned everything about epidemiology that they ever wanted to know, I think that people are going to be extremely careful going forward. So I don't really think that we should think in terms of rolling quarantine. We should think about risk management going forward and how we're going to implement that risk management. How are you going to get your workers back in the door in a way that makes them confident that you've got a safe workplace? That would be one of the key concerns. How can we be sure that our kids can go back to schools and be safe? That's a key concern. Testing would resolve that. If we can't get to testing, we're going to have to use other methods. But when I say testing, again, you should ramp up a pop-up industry, which all it does is test. One policy would be that the government would pay all the costs of this industry, and any test that they can sell at a competitive price, that's pure profit to the company. And they would produce lots and lots and lots of tests right up to the point where we get totally saturated with these tests. I think people say it can't be done, or we don't have enough resources to do that, or something like that. But how many cups of coffee do we produce per day? How many hours of TV do we produce per day? How many everyday items, eggs, do we produce per day? So you've got on those kinds of goods, you've got enough for every single person in the whole economy. You want something similar to that for a COVID-19 test so that we can avoid quarantine, a super costly policy that's really damaging, has the potential to damage the U.S. economy. I think if it's just for the second quarter, I think we'll be okay. But if you have to go on for a long time, it'd be very damaging.
Do you think our economy and the job market are going to look different after this crisis? What are some of the things our members might look for?
I think some of there have been innovations, obviously, over the last 20 years, most of it is associated with technology. We're using technology right here that we wouldn't have used a while ago. So I think to get the new technology to be adopted, it's always a difficult decision for a business because they're used to doing whatever they were doing in the past. They like that piece of capital, and so they continue doing things the same way, even though there's better technology available. So I think what this is doing is showing off new ways of doing business, and you might get speeding up of technology adoption that you would not have had if this had not come across. So I think that's probably the main issue. Something like movie theaters, people have been talking about this a lot. That's been a trend for a long time. People build home theaters in their houses. That's starting to trickle down even to lower parts of the income distribution. You know, big screen TVs with all kinds of speakers on them. You start to ask yourself, you know, why are you going to the movie theater? And many people, I'm sure you and many of your friends have asked about that. So that strikes me as an industry that was kind of on the edge of disruption anyway, and then you have the pandemic come along, it might push them over the edge. There are probably quite a few others that people have talked about, so I think those kinds of things could easily be pushed faster by the pandemic.
So last question, and this is a good transition into our conversation with Congresswoman Wagner. Congress just passed the $2 trillion CARES Act, as you know. What impact, if any, are you seeing on the economy, small businesses, or the workforce as a result? And what else should Congress be thinking about doing?
Well, I think it was smart to use the unemployment insurance program. I certainly advocated when I talk to people that we use programs that are established, the infrastructure's in place. You're not trying to stand something up brand new. It's a big country. You have to use what you have, use the tools that you have. And Congress also put more money into the unemployment insurance program. So normally we would only give 50% or 40% replacement rate on a person's income. And that's meant to get them to search for work and get them back to work. But here we're giving something closer to 100% of income because this is pandemic relief. So I think that's the right kind of response to this. I'm a little concerned that the 100% doesn't go away at the right time. It should go away exactly when you reopen the economy, but you know, in a crisis, there's only so much you can do. I think this small business adjustment, small business administration program has also been quite successful and will keep some small businesses going through this process. They're often in a world where they don't have 90 days of cash to get through and pay the bills. So I think that'll be successful. I think the liquidity programs have been quite successful, and we've got more coming on that dimension. We've got the Main Street funding facility, which I'm very hopeful will be successful as well. So I think we've done a lot of things, some of it jointly with the U.S. Treasury, and so far so good. Let's knock on wood, though. I think with a crisis like this, they always take twists and turns. Unexpected things can happen around any corner, and we really have to keep our eyes open to see what's going to happen next.
President Bullard, thank you very much. We really appreciate your insights and your leadership. Thanks for being on the call with our members today.
Great. Thanks for having me.
Take care. Now joining us is the United States Representative serving the 2nd District in Missouri, Congresswoman Ann Wagner. Currently serving her 4th term in the United States House of Representatives, Congresswoman Wagner serves as Vice Ranking Member on both the House Financial Services Committee and the House Foreign Affairs Committee. Please welcome Congresswoman Ann Wagner. The floor is yours, Congresswoman.
Hey, thanks, Austin. Can you hear me all right?
Sure can.
Okay, super. And thanks to you, Tom, for your tremendous leadership at the St. Louis Regional Chamber. I want to thank President Bullard for his insightful update. I got to catch a chunk of it here. It's a pleasure to be joining the St. Louis Regional Chamber today to, I guess, discuss our current state of the economy and what Congress has done and continues to do to help Missourians kind of get back to work and keep business open and hopefully allow our economy to rebound. I want to start by kind of reminding everyone on this call that what we're experiencing today is not like the financial crisis in 2007, 2008. It's economically much more profound than that, but what we're seeing in the economy is really due to a health crisis. The fundamentals, we don't have the systemic problems in our financial industry, our housing markets, derivatives, things of this nature. It's just completely different kind of beast. My colleagues and I on both the Financial Services Committee and throughout Congress, I feel like all day is an everyday our phone calls with Treasury, certainly with the Small Business Administration, our banks, our credit unions, lots with our regulators, businesses, and constituents, frankly, all in an effort to shape and make this latest legislative package come to life and get the money out the door and the processes set up. You know, we just passed and lift some of these onerous regulations so that our businesses can, in fact, continue operating after this period of instability. Specifically, we were able to craft emergency relief for our small business community, which, let's face it, it's the backbone of our economy, and the whole key here was to give them the tools and the resources to help them stay, keep their workers employed. And we have worked with the Federal Reserve as they have acted also in the face of this tough economic conditions, and we stay in close contact with Treasury Secretary Mnuchin. Just got off a call with him so that we can act as needed and be sure and communicate during these difficult communication days some of the things that we're seeing on the ground as these programs roll out. I imagine that President Bullard mentioned it, but last week the Federal Reserve announced the creation of a Main Street business lending facility, and this would support small and mid-sized businesses. It differs from the PPP program and the EIDL program. This particular, the Main Street Business Lending Facility, is geared to eligible borrowers in business with, I think it's up to 10,000 employees or up to $2.5 billion in 2019 annual revenues and such. So this facility is going to kind of ensure that credit flows to those small and now larger, mid-sized and larger businesses that may not have been able to receive, as I said, the support through PPP or the Fed's other lending facilities. I don't know whether the president went into it, but there's a total of 9 different lending facilities that the Fed has set up that is pretty extraordinary. The Main Street Business Lending Facility, which was just stood up, has already gone through $75 billion. But to folks like all of you on this call and business leaders, it's just going to protect our businesses from the kind of current liquidity crunch and ensure economic recovery on both Main Street and keep our employees hopefully employed. But there are 9 different facilities that the Fed is pumping liquidity into to the tune of about $2.3 trillion. And many of you, I know, have heard about the small business is running out of money and cash on the PPP funding, and I'll talk about that in a little bit more, but we are committed to increasing this money before it runs out, probably at the end of this week. This program is absolutely vital to America's small businesses that are struggling to stay afloat during the health crisis. We're about exhausted the $350 billion of the original appropriation. I also want to mention, Austin, that there are more monies and processes that are working. I can tell you that this past Friday, the first $30 billion of a total $100 billion package in funding for our hospitals and our healthcare providers that was included in the CARES Act was delivered. There is still $70 billion left to be dispersed to hospitals and healthcare providers in order to combat the effects of COVID-19. But this is the first tranche was sent out last Friday of $30 billion, another $70 billion to go out the door. What else have we got? I imagine that I should probably also make the point that there's about $150 billion of the state and local government monies that will be going out, half of it this week, half next week. And Missouri's been allocated, the governor, to the state of Missouri, $2.4 billion. And I can tell you that because St. Louis County has a population over 500,000, it will be taking an allocation, a portion of that $2.4 billion. We've sent half of this money to the state of Missouri this week, and another half will go out next week. I can tell you that Kansas City will also, the only other area that has a population above 500,000. They'll be receiving a tranche of this $2.4 billion coming to the state of Missouri. The municipalities will receive some of the money that was going to County Executive Sam Page in St. Louis County to be distributed if necessary. And the governor will then be taking the state money and bolstering up some of the expenses and coronavirus-related expenses that some of the counties may be having. So that's a little state of play of where we are. Austin, I'm happy to take a few questions. I can certainly go into the specifics of the Paycheck Protection Program more, or whatever else you'd like to hear about.
Sure. Thanks, Congresswoman. And, I know being quarantined for about a month now must be difficult, especially when action's happening in Washington. But you've been a great champion of the region. We know you're itching to get back. Can I ask you about how have businesses been impacted by the coronavirus in your district? And, if there's a phase 4 package, what would you like to see included?
Well, we've done, we're just implementing the phase 3 program right now. Phase 1 was an $8.3 billion supplemental that we were able to get done. Phase 2 was about $100 billion program that really helped a lot in terms of sick leave, and it required paid sick leave for impacted American workers. There was free testing. We took care of a number of our seniors and the Meals on Wheels, emergency food assistance programs, things of that nature. And then, of course, there was the CARES Act, which is a $2.2 trillion package. Now, it did a lot in terms of going after this virus and the medical and health crisis that we're in, whether it's PPEs or testing, things that we did for seniors, for veterans, for SNAP, certainly the work that was money that went into our strategic stockpile and ventilators and all of it. So there's a big health portion of the CARES Act that was very, very important, and it's not been fully implemented yet, but I'm going to speak here just specifically about how it is that we keep our businesses open here in the 2nd District and across our country, and help it to rebound. We've seen, big interest in the Fed launching these funding these 9 different lending facilities aimed at providing kind of liquidity to the economy. Not only are we assisting our businesses, we've also been providing funding for the direct relief payments through the IRS. Some are saying that, I think Mnuchin calls them the checks in the mail or the rebate checks. I think that those started last Friday and should be arriving, I think by Wednesday, to probably 80 million Americans. Some are going to have to go to irs.gov if they did not file tax returns in the last, either in 2018 or 2019, but that's $1,200 per person, $2,400 for joint filers, $500 per child. The majority, the bulk of those that have direct deposit will be receiving those by this Wednesday. So that is a real plus, I think, for certainly constituents in the second district. Now, the Paycheck Protection Program that was passed in CARES is really about saving those jobs and supporting small business. This is geared towards the businesses with fewer than 500 employees. It also includes 501c3s are also applicable, and it includes self-employed workers, independent contractors, gig workers, all of them. So all are part of the loan a business receives under PPP can be forgiven if they keep their employees on payroll or rehire them by June 30th, 2020. So payroll costs must be 75% or more of your approved loan amount for forgiveness, and the forgiveness won't happen until the end of the 8-week period of an employment following receipt of your loan. These are completely SBA backed. They are direct-to-lender payments that are going out, loans / forgivable grants, whatever you want to call them. And as of yesterday, I can tell you that more than 1 million loans have been distributed to small businesses in a program that's been up for about 8 days, Austin. And there's more than 200, Secretary Mnuchin just told us that more than $240 billion in loans have been processed. Nearly 4,600 lenders are participating. And while the funding for PPP is starting to run low, we're committed to, I hope, seeking a clean PPP funding increase of about $250 billion that in a program to top it off, put more money in a bipartisan program that was set up. CARES was totally bipartisan when we finally passed it at the end of the day. So that is important, along with the Main Street lending facility that for those businesses with up to 10,000 employees and up to $2.5 billion in annual revenues. Then there's the unemployment. And as of last week, the state of Missouri saw an additional claims totaling 91,000 workers. It was 104,000 the week ending March 29, then add another 91,000. So, whoopsie, sorry. Let me turn that off. I've got so many phones going here. So we're up to about 200,000, and the $600 federal pandemic unemployment compensation payments, which are going out, and I can tell you that Labor Department got the state of Missouri. Unemployment is obviously distributed through the state. Labor Department got them the guidance on this about a week and a half ago. So they've had it, and they just put up the first tranche, which is the federal pandemic unemployment compensation. I'm already told the $66 million in benefits, about 115 million claimants in Missouri are now, as of today, receiving their additional $600 payment per week. You know, there are still some kinks in the system in terms of the self-employed and gig workers, something called the Pandemic Unemployment Assistance, PUA. That should be available soon. There's a lot of programming that has to go into that, along with a few other kinks that they'll have. But the vast majority should be receiving that for about 4 months, an additional 600. So unemployment in Missouri is 20 weeks. Every state is different. The federal government added another 4 months to that. And at that, you added $600 to your monthly state of Missouri allowance. So if Joe Smith qualifies for $320 per week under Missouri benefits, Joe Smith is going to receive his $320 per week plus an additional $600 per week for a total of $920 a week benefit. So that is now up and running. There's still, for these gig workers and self-employed and contractors, state of Missouri is still working on that program. But that gives you kind of an idea of the kinds of programs that we're in the middle of rolling out and how important I think they are. It's critical that we kind of continue to implement the program, disperse the funds that Congress allocated in the CARES Act as quickly as possible to get the relief to my constituents and all Americans. So what else have you got, Austin? Anybody else?
Yeah, sure. There's one last quick question, Congresswoman, if I may. You're the vice-ranking member of the House Financial Services Committee. Will the committee be taking up any necessary reform as a result of the crisis, and what regulatory reforms could be addressed to help struggling businesses?
Yeah, it's probably a little too early to tell what, if any, reforms are going to be taken up post-crisis. I don't expect us to enter into some kind of a Dodd-Frank kind of process here. The committee certainly remains committed to working hand in glove with Treasury and the Fed to ensure that these American businesses and jobs are protected and our financial system remains sound. One reform that could be addressed when the crisis is passed is kind of ensuring that our federal agencies have the tools they need to respond quickly should a future pandemic take place. We've heard from a lot of struggling businesses about some of their frustrations with not receiving financial assistance soon enough. You know, this is a big mammoth package. It's hard to get these. So much of it is distributed through the states or through our local banks and credit unions and lenders and financial institutions. So it's hard to get them the guidance and the assurances that they need to move forward. So we've taken to know some of their frustrations, and that's on Congress and the regulators to ensure programs are running as efficiently as possible. So there is necessary in times like this. Some of these companies need to be able to make the changes necessary to support their businesses and employees in the face of the pandemic. We've heard from multiple businesses about the myriad of rules and regulations that have hindered them during this crisis. And we've got to be clear that tailored deregulation is necessary in times like this, tailored deregulation. And if there's any kind of phase 4 that's coming up, we'll see. We want to get more money, another $250 billion, Austin, into the PPP program. I hope that partisan politics don't get in the way. I know they're working on a deal now in the Senate and the House. It would have to be done by unanimous consent, or unfortunately, a number of us would have to come back for our quorum call. Right now, we have been told by our leadership and by the majority leadership that they don't plan on having us back in Congress in the U.S. House and the earliest, the week of May 4th. So we'll see. Obviously, it depends on the science, the health, making sure, I think as President Bullard said, we don't have these rolling quarantines and repeated shutdowns. So we want to make sure that the risk management is in place and that people are comfortable coming back. We may have to head back to Congress a little bit sooner than others, but we got to get this economy up and running. People, we are just hemorrhaging money and jobs, and it's been really rough on our economy. I do think we will bounce back. There are not systemic problems here. My office is committed to that. Austin and Tom, again, thank you for your leadership. People can always call Miriam Stonebreaker or Jordan Fears in my district office. The number is 636-779-5449, 636-779-5449. In D.C., you can talk to Zach Gates, and the D.C. office is 202-225-1621. Many of you that are on this call I know well and have spoken with already. I'm happy to take your calls too. We're just working morning, noon, and night to implement the CARES Act and do whatever we can. And the constituent calls are, everyone from people that are stranded in Peru and in India to businesses that are just trying to get that small business loan, trying to get their rebate, stimulus check, whatever you want to call it, or trying to navigate the unemployment insurance benefits that are out there for them. So I want everybody to stay safe and healthy and well, and thanks to you in the chamber and all that you're doing to ensure that, and we're happy to visit with any of your members at any time on some of these issues and more. So thanks, Austin. Thanks, Tom, again, for your leadership too.
Congresswoman, thank you very much. These are tough times. We appreciate your leadership in Washington. Thanks for being on the call.
You bet. I'm going to hop now. I think Blaine's going to take over if he's on the call. We've got a call with the governor now, so we're going to visit with him a little bit about some of that big tranche of money that's coming his way to distribute and to use for this crisis and this pandemic. And I look forward to visiting with you all again soon. Take care.
Take care. Thank you, Congresswoman. I would now like to pass that on to Congressman Blaine Luetkemeyer. Congressman Luetkemeyer serves Missouri's 3rd Congressional District. Along with Congresswoman Wagner, Congressman Luetkemeyer serves in the House Financial Services Committee and is the ranking member on the Subcommittee on Consumer Protection and Financial Institutions. Thank you for joining us, and please welcome Congressman Blaine Luetkemeyer. Congressman, the floor is yours, sir.
Well, thank you, Austin and Tom, for putting this call together. It's great to be with you. I was listening to Ann. She did a good job of explaining a lot of the programs and a lot of the thought process that's been going on behind the scenes. So I don't want to double up here on what all she's been saying. I'd rather just go right to your questions, and that way we can minimize some of the, maximize your time and minimize duplication here. So, but thank you for the opportunity. It is a difficult time for all of us, and we're all going to have to look at things a little differently here in the future, but I'm happy to take your questions.
Thank you, Congressman. What impact, if any, are you seeing on the economy, small businesses, or the workforce as a result of the CARES Act passing?
Well, I think, as Ann indicated, you look at all the different programs that are in the CARES Act, and the money is now starting to go out. Again, indicated that there are over 1 million loans and over $243 billion that are out there now that's been approved by for the Paycheck Protection Plan. The different facilities that the Fed have implemented, are a lot of them are up and running. The other ones are going to be up shortly that provide liquidity for whether it's the banks, the credit unions, or other business entities that need those dollars around the country to be able to shore up, the bond markets, the commercial, security market, secondary market, all of those things. So what I see from everything is that the money is now starting to flow, and I think that's going to enable the economy to continue to limp along here. I equate it to a situation where, if you break your leg and you sit around for 6 weeks while your leg and your whole body is going to atrophy, it's going to take you longer to recover. If you had been up and working and walking around and, taking, even though you need crutches, you still could keep your body in good shape while your leg recuperates. And I think that's what we're trying to do with the economy here, is to keep it from atrophying to the point where it can't be resuscitated. A lot of the payments, unemployment payments and the payments through the PPP program here, the Fed came out with a study several months ago, about a year ago, in fact, that it said that 40% of the people of this country couldn't cover a $400 bill tonight. So stop and think about it. 40% of the people of this country, if they came home tonight and got up tomorrow morning and they had 2 flat tires on their car, wouldn't be able to go get those 2 flat tires fixed because they wouldn't have enough money in their savings account or their checking account, or even if they had an account maybe, to be able to take care of that need, for that financial need for themselves and their family. So when you look at it from that standpoint, getting these dollars out to all these different entities, all these different individuals, is vitally important to keep the economy going and keep these families' economies going so that they can survive this. And, we're hopefully looking at this on a short-term basis. It's not something that's going to last a year. Hopefully 2 or 3 months here, we'll be back and up and running and getting going. But I think, as you've seen, the programs are working. They got some of these things up in like unbelievable record time. And I think the people are responding. And I think we're going to get a good grade card on this here in another 2 or 3 weeks to see how the dollars are working, how the programs are working. But right now, we're at the very beginning to where we can see that the dollars are being applied for, that they're going out the door, and that people are going to having in their accounts and hopefully be able to tide them over.
So, Congressman, for the folks on the call, the 3rd Congressional District of Missouri takes up a lot of the western part of our region and a lot of the central portion of Missouri. What are the businesses in your district saying to you about getting through this crisis? And what do you think should be included to help those struggling businesses if there was a 4th phase?
Well, they're telling me right now that things are crashing for them, and we've got to get back to work. I was talking to a friend of mine who's a mortician in central Missouri, and he was telling me he's had to take care of more suicides in the last 2 weeks than he has coronavirus victims in the 2 largest counties in central Missouri combined. So it tells you that we got a problem. I'm talking with the lady in my office who handles Veterans Affairs. She told me over the weekend that she's become a counselor to all our veterans instead of being a caseworker. And the VA itself said that we've got lots of problems with veterans who need a large support group of people around them, and that's not there. So as a result, we've got to start to look at ways to get our economy back open and going again. And if you start talking about another package, I prefer to wait to see what's happening with this one. You know, there's a lot of the money other than the PPP program that hasn't been applied for yet. That's not, those funds aren't running out. You know, I think if I had to pick something that I would be concerned about right now, I think it would be the unemployment insurance funds of individual states. I think, you know, as Ann touched on, the numbers of people in Missouri are a record. I think they applied in the last 2 or 3 weeks the same number of people for unemployment as they did the entire year last year. So what happens when we run out of unemployment insurance dollars here in the state? You know, at some point those funds have to be replenished, and what happens is you're going to have to raise the unemployment taxes to take care of that, which is another you know, kick in the gut for small businesses especially. So how does that, you know, how can we minimize that? I think probably the next thing we look at if we do a phase 4 is how we can you know, shore up the unemployment insurance funds for a lot of states. I think the rest of it, I would prefer to sort of wait. I think another 2 or 3 weeks, we'll have a better feel for how, number one, we are doing health-wise in this state, in this country. And I think number 2, you'll have a better idea also economically where we are at with regards to the dollars going out the door, how they're impacting the businesses and individuals, how our economy is going along, and where the weak spots are, and where we need more money, or whether we got more than we need in certain areas. So I think another 2 or 3 weeks is what we're going to take here to be able to really ascertain exactly if and when and how much and what kind of a phase 4 plan would look like and what it would be implemented for.
Congressman, I understand that you were just in a meeting with Treasury Secretary Mnuchin. Is there anything that you can share with our members about that meeting?
Well, he just asked or answered a lot of questions. Most of it was with regard to the PPP program, the Paycheck Protection Program. There's also some guidance that is coming out shortly today with regards to the independent contractor and sole proprietor on that part of it. I know there's some other types of guidance that we're looking at, and a lot of people think this is an SBA program. It's not. It's a Treasury program. Treasury, through the CARES Act, was given the authority to put together a program to help try and keep our economy from atrophying here. And what they've done is use the banks, and I know there's a lot of discussion on how to deliver the dollars, but they decided on using the banks and credit unions and other lenders here as the main way to get the money out as quickly as possible, and then use SBA programs as a guarantee for those dollars. And so a lot of people are going back and trying to get guidance from the SBA, which is fine from the standpoint of understanding what those rules and regulations are. However, when you do that, those programs all have to be looked at then under the new guidance that's issued by the Treasury. So he was going through answering a lot of questions with regards to that, and you know, if you have an individual question, I'd be glad to answer it. But each one is you know, there's a 10-day issue. For instance, the banks are supposed to get all the money out in 10 calendar days. Some of them are having problems doing that. If you apply for the loan and you're approved, but you don't have the money out the door yet, does that mean that somebody else gets ahead of you whenever you get the money? No, once you get approved, that locks in your amount of money for your loan. I mean, it's stuff like that. So, but I think Ann touched on the big item, which was it's over 1 million loans that have been made, 243 billion out the door, and 4,600 lenders so far. That's about a $2 billion an hour. So the programs are working. And it's amazing they got them up in only a week or two, and with minimal amount of, although there was a lot of consternation on some of the rules and guidelines, and it's as anything with the government, there's going to be some cracks and some holes in the floor. But I think all in all, it's amazing that they've been able to get this program up and running in such a short time and get that much money out the door. It's phenomenal.
Sir, I'd like to ask just one last question, and also offer you an opportunity to give any final thoughts. But who can be a resource in your offices, in offices around Missouri or in Washington for businesses seeking help?
Yeah, in my DC office, it's our Chief of Staff, Chad Ramey, at 202-225-2956, and locally around St. Louis area, my District Director is Jeremy Ketterer. We got Krista Montgomery in the Wentzville office. That's 636-327-7055. glad to talk to you, either in DC or locally, but glad to get on the information back to you. I'm the ranking member, former chairman of the Financial Institutions Subcommittee, which oversees all the banks and credit unions and payday lenders and all the regulators, including the Treasury, the Fed, Comptroller, all those folks, FDIC. So that's the world I live in, which is kind of right square in the middle of where this is. So I've been in the middle of a lot of these discussions over the last several weeks. And, you know, I think when we get back to DC, I think we're going to have to look at a lot of the rules and regs that worked and didn't work. And then if they didn't work, why do we need them? And if they did work, do we need to tweak them? So there's a lot of things I think coming up that we're going to have to look at from our committee standpoint. Forbearance and flexibility by the regulators. We're in a whole different world now with regards to the loans and the way that businesses are operating and having to operate, and banks are having to work with their customers than what we were 2 months ago. And as a result, we're going to have some long discussions with regulators on how to do this. But glad to talk about any of this with anybody anytime. Just give me a call. But otherwise, again, appreciate the opportunity with you and your group this morning, Austin, and much success. We got to work together, stay together, and I think we'll get through this and be stronger on the other end.
Congressman, thank you very much for your time. We know how busy you are and doing the people's work, and we certainly appreciate every effort you're putting towards helping not only the U.S. economy, but our local economy. So everyone, thank you very much for joining today's COVID-19 briefing on the economy and financial services. And, you know, while our entire region's economy faces uncertain time, it's really great to see continued cooperation and commitment by the Federal Reserve and our regional elected leaders. Strong leadership from our governments, our regulatory bodies, and civic organizations are going to be required to embark on a new road to recovery. The St. Louis Federal Reserve has sent out a business survey. The Chamber sent out a link to that survey late last week. If you have not replied to the survey, please do. If you do not have a link to the survey, please contact Riley Nix. And please join us for another Business Recovery and Sustainability series on responding to supply chain concerns for COVID-19. This virtual meeting will be held this Thursday at 10 a.m., April 16th. On Zoom, the webinar will explore the impacts of COVID-19 on the supply chain industries and describe how to mitigate the economic impacts of these potential disruptions. So email Riley Nix if you would like any more details. And again, thank you very much to our speakers this morning. And thank you again for joining our virtual meeting. Our meeting is adjourned. Thank you.